Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for August 16th, 2010. This is Patrick Ceresna. First off, as always, we want to start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. We were talking about this rising wedge formation with overhead resistance potentially coming in not only that 113, 114 area, but potentially maybe even as high as 115, 116, where we would think that the highs of the summer would come in. At this stage, we have now had the technical reversal out of that rising wedge. And while we cannot technically and definitively say that this is the actual move that is starting the next major decline, but this is exactly how they technically start. What is going to be very important over the next week is to see whether or not the bulls have enough to undo the damage that was done in the last few days by reversing this market back above the 110, 111 zone on the upside. If we see some positive technical action that undoes this technical breakdown, then it would go back to a much more neutral stance. But if there's any failure to rally this market and any significance above those levels, then the window opens up for selling to come down into that 105, 106 level for one quick retest first, and then a consolidation and a potential breakdown into the September timeframe that could see a move even go as low as the 92 level on the downside. Not necessarily a certainty that it would go down that low, but technically from a measured move perspective, there is room for it to go even that low. Next here, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO. We see continued technical weakness out of the financials, which continue to weaken. We've already seen the regional banks move their way back to the lows that they put in June and July. You can see that they are on the verge of a significant technical breakdown if this level gives that underneath. If it does, then we could see the regional banks consolidate even as low as the $18 to $20 ranges down below. If that happens, that would certainly correspondingly happen at the same time as the S&P is making a technical breakdown as well. Next here, I want to take a look at the ISE Sindex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. In the same way as we see in the S&P, we had that rising wedge formation that found overhead resistance at the 114, 115 area. Now we have a technical reversal coming on the downside. Now the question again, just like the S&P, these are all very correlated markets. If we see failed rally attempts here, then we could see technical weakness not only retest that 100 to 102 low that was put in, but could technically weaken even as low as the 90 level down on the downside if the market really grabbed hold and it started accelerated selling on the downside. At this stage, we're not outright forecasting that downside target. We're first going to see whether the bulls can reverse this or whether certain supports come in here. But recognize that any major technical damage that starts happening below that 105, 106 level really opens that window for that final move down. Next here, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. Here we've seen a basing down at this 8 to 8.25 area and created a very shallow flag. We were looking for potential upside rallies to even go as high as the 950 to 975. And there was a very brief attempt where it came just shy of that. But realistically, this entire rally has been extremely weak, and the reversal in the last 3 days has been very significant. We're already heading back down to that important support line around that 8, 8.25 area. If that's going to be very important for the home builders to hold that. If it doesn't, then the window immediately opens up for a move all the way down toward the $6 to $7 area on the downside. Again, that would be our downside target once there's some significant technical damage done. We'll be watching again this week whether the bulls can dig in and reverse this before we outright have the confidence to trade the downside. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and those natural gas stocks had really a failed rally attempting to, up in this 99 to 102 area, the retracement zone that we marked off over the last couple of weeks. I came right in there in that rising wedge formation with this reversal. Again, this is, I don't want to sound like a broken record, but this is exactly the same setup that we're seeing on all the other charts. And I believe that all of these charts are either going to break down together or they're going to find support together. I don't think one of them is going to move on their own. So if we see that accelerated selling in all of those other indices and we see the S&P fail, then this natural gas index could very easily come for a retest of that 89.91 zone. But if the S&P is destined to make its way move down into the 90s on the spider, we subsequently would see a breakdown in the natural gas stocks that could easily come down into this 80-87 zone on the downside. Finally, I want to take a look at the mini FTSE 100 index, which is the symbol UKX. The UK market here, more or less, it is a spitting image of the S&P, where the bounce retracement higher was a little bit more robust. It managed to make higher highs on that one side up toward that 540, 550 focal point we were talking about. It rejected there and now broke this wedge down lower. Again, we're going to be watching at this stage this 525, 530 area where we're consolidating right now. Anything that technically starts breaking below that level and fails to reverse the damage done would open the window for a retest of those previous lows around that 480, 490 level. But the measured moves could potentially even go as low as the 440 to 460. So, but again, before we target those kind of downside numbers, just like in all the markets, we need confirming price action. So right now we've only seen the technical break, and now we need price action confirmation to conclude that we are actually going to have a bearish move here. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.